Hello, everyone. Welcome back to howtotrade.com. I'm Shane Veneer, and this is the 920 Crossover Strategy Workshop. It's an incredible feedback on the 920. A lot of folks really like this strategy. I've heard from a lot of you that trade it actively, and I know a lot of you that are looking for a strategy that you can trade that's relatively intuitive, relatively simple, but also gives you an opportunity to engage a wide variety of markets on a bunch of different time frames. The 920 can do that. Just remember that your success is always going to depend on your risk management, and I'm going to show you how to build these trades and give yourself an opportunity to be in the market and catch a move. But at the end of the day, if you're using a crossover strategy like the 920, it's all about catching moves. It's all about catching moves. We're going to show you a few moves that have been absolutely huge, a few that investors got in on that made a ton of money in Nvidia, and we're going to talk a little bit about Nvidia as well today, and also in crypto. Really, the 920 was, on longer time frames, was a precursor for many of these big moves, and it came across the board last October, last September. I'm going to show you some of that from a historical investor perspective, but I'm also going to show you the nuts and bolts of this strategy, exactly how to trade it, and how to set it up and get ready to go. So I want to welcome everybody to the workshop. I know we usually get a lot of folks in here that don't usually watch these streams, but that are going to check this one out. So Timey, good to see you. T Marina, always a pleasure. Bobby Bob, good to see you too, Ku. All right, guys, let's go ahead and get rolling with it. I want to start off with a trade idea, trade follow-up, and this is the same trade follow-up that we had from yesterday. There should be a new trade idea coming out later today. I'm not necessarily sure if we're going to put one out today, but this Bitcoin trade is live. Norman, good to see you. Good evening from Zambia. Well, all right. Good morning, good afternoon, good evening, wherever you may be. It's about 11 a.m. here in Dillon, Montana, and I'm just happy that the sun finally came out, although it's only 38 degrees Fahrenheit. Still, though, a lot warmer than it's been. So it's good. I'm glad. I always love to see new faces wherever you're at. Be sure to weigh in on that YouTube live chat, or if you're in the trading room and have live chat access, go ahead and let us know. Right there, the trade follow-up. This was Bitcoin. We recommended buying Bitcoin at market yesterday. Interesting ride. It's been an interesting ride right here. Our profit target was up around 91. Not necessarily the best profit target I ever had. I thought we could run into some trouble right around 90,000. That's exactly what's happened. But we took the bid, the 86, right around the 86.5. So right around here, you're at break even. But what I really want to stress here is exactly what the price action's done since we entered. And it's been pretty good. I have to say it's been pretty good. Right here is really just fascinating stuff. We came down, we took a look at it. Right around in here is where we actually got long this market, and you can see exactly what happened yesterday. We had a really nice rally right up to about 89.3, and that's sort of where this market's topped out. That 90 area, our key levels. Always remember key levels. We have a YouTube video on that as well that not many people have watched, but key levels are huge. 90,000 is sort of where the lid's been on this thing. We bounced, we came down, we tested our support zone, we bounced up. At this point, we're at 89.5. I sort of figured we were going to test 90, but until 90 gives way, we really don't have much of an opportunity at our profit target, which is up here at 91. So this trade's still live. We've got a couple pretty good rallies, though. I mean, right in here, you got a beautiful rally right up to about what? 89.3. So if you're up there at 89.4 and we went long, that's about $3,000. It happened relatively quickly. Then we came back down. We saw really an early session washout, sort of an early session washout right there on the opening bell, ding, ding, washed everybody out, and then you got the reversal, and that bounce was up to 88. But right now, we're just sort of milling around our key level in Bitcoin, so I'm still long. I really don't believe there's any reason to get spooked out of this market just yet, but what I will say is that this type of price action, you're definitely running stop losses. There was people that had their stop losses right there. We illustrate this concept every single day. They had it right beneath this 30-minute swing low, right beneath this daily low, essentially. And then what did we see? We saw big volume come in. We knocked out those longs, and then what happened? We turned around, we bounced right back. I'm still bullish. I think this is a matter of time before this works itself out. We just got to wait and see. We just got to wait and see exactly what happens. So, Mobile Dragon, good to see you. Mobile, Lita, always a pleasure. Lita, welcome. JC, always a pleasure. JC. All right, guys, so that's a good look at Bitcoin. I do want to talk a bit about Nvidia, and then we're going to get on with our workshop. Nvidia, big time, big. I don't think there's a bigger stock in the world, at least today, than Nvidia. Why? Because you've got an earnings report that's headed our way today, Wednesday, 26 February, after market. That's when this thing's going to drop. It's going to be interesting because a lot of folks are expecting a big Nvidia miss. I don't know that that's going to happen, but right now, AI is everything. Chip makers are everything. Semiconductors, energy sources. This is all the new world. get used to it, because these companies are going nowhere, and believe me, they are going to be around. This is the new, I would say that Nvidia is probably the caterpillar for the next century. Instead of building earth movers and really trying to advance the construction industry and infrastructure industry, what is this? Nvidia is going to be a key tech infrastructure player for a long, long time. I'm fascinated to see what happens, though. Right here, you can see on our monthly chart, I put this out on X the other day, and what do you got right there? You got spike low, spike high, and we were right at the back end of that golden zone at 115. We bounced off of that, bang, bounced off of that. We're back in bullish territory. Where do we want to buy? Really risky. Just remember, if you're trading Nvidia, that earnings is coming out. For me, I'd rather be long than short any day of the week. I think that Nvidia is probably going to double or triple its value. Couldn't tell you really when, but I can tell you when a lot of folks decided they were going to buy this thing, and that's when our 9 crossed over our 20 on a monthly time frame. This would be an investor's play. This is how investors trade. They look at 5100s, 5200s, the 920. I've looked at it historically. Not too bad. The monthly chart, you'd say, Shane, I can't. I'm an intraday trader. I'm a trader. And I go, yeah, but think about this. That's in 2023, January. You're buying Nvidia at like $13. That's how fortunes are made. Now, so the question always is, Shane, moving averages are lagging indicators. What you're doing, I go, no, the crossover, there was no lag about it. This market went bearish here. It went bullish here. And once it went bullish, if you're riding this to the promised land until you get another crossover, you made a lot of money. And that's the concept behind the 920, guys. And we're going to dive into it and do the workshop right now. So, all right, everybody, if you want to trade, be sure that you get on with a broker that can take care of your needs. Switch Markets can do just that. That's for international clients. If you're here in the United States, check out Awanda. If you're a futures trader here in the U.S., you can reach out to me on a private message, and I can tell you who I use, although I don't vouch for any futures outfit. I don't work for any of them, so I won't vouch for them. What I will say is Switch Markets is sort of a partner here at How to Trade, a partner broker. So if you need a place to begin trading or start a demo account or do anything really on a base level or even a more advanced level, check out Switch. They got you covered. They can give you a lot of bonuses and a lot of things like that to get you up and running. Great software suite too. Track a Trader, something that we're going to be talking about as the year moves on. And we delve more and more into AI. We had a 5813 EMA strategy video out yesterday. Many of you watched it, got a lot of great feedback, so thank you. And all that stuff is going to be on our YouTube channel, which is right here, How to Trade Com YouTube. Only 13.6 thousand subscribers. That's not very many. So it's a sort of a small family, 294 videos. But what I want to highlight is sort of all of our strategy videos on there. And we've sort of made it a strategy corner where we talk a lot of strategy on this. And I got the question yesterday. Exactly, Shane, what exactly do you like to do with regards to strategies? How can you trade all of these strategies and still be able to do it all profitably? And what I say is I don't trade them all. The strategies on this How to Trade Com and on our website, those are designed to be a jumping off point for you guys. Meaning, I just got the strategy, the question the other day from a trader, and the question was, Shane, I need a strategy. I would love the Forex. I'm struggling. I need a new strategy. I said, well, take a look at a few of these. 813 scalping strategy. I did the illustration on a 30-minute chart. Yes, you can scalp 30-minute charts. Show you how in a second. 9 EMA Fibonacci retracements. That's one where we use the 9 EMA Fibonacci retracements to improve your entry point on the 9 EMA. Compound trading. That's just how you can really build your money into a formidable thing over time with just a small edge. ICT kill zones. I get the question every single day. When do you trade? Well, ICT kill zones can help. AI to code the EMA 920 EMA crossover as well, and that's definitely a good one. So 920 EMA, that's going to be that video off of the channel. If you haven't seen the channel, feel free to check it out. But this strategy is easy, and I like easy. We're going to show you 2 ways to trade this thing today, and we're going to use it on some of our favorite Forex pairs. And also, I'm watching a 920 on gold that I think is interesting. Now, gold's sort of, we're heading right around 22,915, somewhere in there. I think we've got a potential sell setting up, and I'm going to tell you why. Let me see. T. Marine, and those on Forex Signals. Yeah, and we do have Forex Signals TV as well. Thanks for reminding me. Let's see. Dominic, what time frame does it work best in? I'm going to tell you right now exactly. That's the number one question, Dominic, that I get every single day, every single session. Shane, what time frame? And I understand your line of thinking. You say, okay, I got a strategy. Now tell me the time frame and the market, and I'm going to get in there and trade it profitably. It's not quite that easy. The time frame that you're going to want to use is going to vary according to market. We're going to get to that in just a second. So 920 EMA, there's the video. If you haven't seen the complete video, check out our YouTube, and you can go ahead and get into it. It's relatively quick, 11 minutes, and it'll get you into everything you need here. This is a good illustration of the strategy here. US dollar, Japanese yen, 30-minute chart. The first way that we're going to learn to trade this is simple. We're just buying when the 9 crosses the 20, and we're selling when the 9 crosses under the 20. Now, how do we make this thing really sing? How do we make it work? Dominic's right. There's a couple of things that you have to know. Number one, you have to know the time frame to trade this on, and you have to know when to trade it. Because I will tell you for a fact, if you get on a real short time frame in a period where there is nothing in the market like this, you're going to lose. You're going to get what I call chopped up. I call that the weave formation, where the 9 crosses over, then it crosses under, then it crosses over, and you're constantly losing trades, and you're not able to get where you need to go in the markets, and that's to be profitable. So how do we avoid that? Let's just go ahead. We're going to get to that in just a second. How do we avoid this? How do we avoid the weave? This area right in here, you're going to lose almost every time. When the market flattens out and there's no volume or no volatility, you're going to lose on the 920 EMA. So how do we do it? Remember, it's simple. Buy when the 9 crosses over the 20, sell when the 9 crosses under the 20. When am I going to need to trade it? You're going to need to trade it when the market's at its most active. Now, with short time frames, I would highly recommend beginning this strategy on a Forex pair. I would start with my daily chart, and I would start with a 4-hour chart. Now, if you want to trade intraday strategies, intraday trading, everybody does. That's why you're all here. 30-minute chart Forex pairs can work, preferably during that London-New York overlap. Now, if you wanted to trade a 30-minute Forex chart all the way through the London Open, through the New York close, I highly recommend avoiding that tail end of the New York session. What I would do is I would begin at the London Open, and I would shut it down right at that London close. Now, the heart of that, after the New York Open to the London close, that's called the London-New York overlap, and that's prime time. That's when most Forex traders are doing their business. That's when a lot of people are in the market. The market is what we call deep, and it's liquid. Great example right here. Let's say I'm trading that overlap. Right there, that's about 6 a.m. my time, so about 8 a.m. Eastern. This crossover on the 30-minute is a lot better than this crossover. U.S. traders aren't in the office yet. There's no liquidity here. Okay? And it's a heck of a lot better than this one right here. These, right after that London close, 9 a.m. my time, 11 a.m. Eastern, all of a sudden the market gets really dead. Now, of course, we're looking at historical data there. So what does all this mean? It means right here, what do we do right now? 30-minute chart, U.S. dollar, Japanese yen, that's as clear as day. Crossover, bang. You've got an opportunity there potentially to take a position for the rest of the day. It's not a bad one. How would we have built that trade? We're going to go through the progression real quick, and then we're going to go on the hunt looking for some real trades. Okay? You'd have entered right there on that close. Why that close? Well, actually, you probably could enter on this close. So right there is going to be your crossover. Now, it's funny that happened because I'm going to show you something that may be able to help you spot these crossovers. Right there's your crossover, so you'd have been going short right there on that bar close. Now, if in fact you did that, what does your stop loss and your profit targets need to be? I highly recommend going with a stop loss above the previous swing high, especially if you're working on like a 30-minute chart or a 5-minute chart or something like that. You need to be aware of market structure. Now, a lot of traders do this. Stop loss is right above that signal bar. Crossovers here, bar close here. There's my sell. There's going to be your stop loss. I got the question earlier today on YouTube. A guy was kind of mad at me. He says, Shane, what are you talking about? You can't scalp a 30-minute chart. And I go, the hell you can't. Listen, scalping, typically people believe in scalping as high-frequency trading. I'm not talking about high-frequency trading. I'm talking about scalping, meaning we're going to shoot for a small amount of pips, and we're going to have a small stop loss, small risk, small amount of pips, and we're going to look to make a lot of trades. If we're using a 30-minute chart here, what's wrong with that? What's my high right there? 34. So let's say I'm going to stop myself out at potentially 36, something like that. What was my entry point? My entry point right there on the close was 13. That's 23. That's a relatively tight trade by most people's standards. There's a 1-to-1. Little 23 pip trade. Do we get that trade? Maybe. Somewhere down around 85. That's our profit target. Bottom line is this. A scalp, yeah, a 30-minute chart is a longer time frame for most traditional scalping strategies, but a scalp's all about how much you risk. I mean, I trade breakout scalps using daily key levels, In those trades, I'm in for 10 or 15 seconds. So the time frame doesn't necessarily matter if you're scalping. You can scalp any time frame you want, but the key to scalps are you're in and you're out relatively quickly, and more or less you make a lot of trades. So is a 30-minute time frame the best for scalping? No, but it can be done. It can be done. And right here, would I consider this a scalp? This is more of just a day trade. But I really don't want to chop down semantics. I don't want to sit around and argue about what means what. I really don't. I don't care. I know that that's a tight stop loss. We've got a crossover. I've got a way to get in the market and an opportunity to trade it. That's the first way we trade it. It's just naked. Now, the second way that we trade it, this one I like better. And this is how we're going to start looking at the market really starting right now. That's with RSI confirmation. Now, all this is in the video. The second real thing that you need, aside from dialing in a good time frame and dialing in a live market, is going to be typically a confirmation device. I like the way that the RSI dovetails with the 920. I like it because it's easy. When we're above 70, we're overbought and we're looking to sell. When we're below 30, we're oversold and we're looking to buy. So if I'm over 70, I'm looking for the 9 to cross under the 20, and I'm selling the market. It's that simple. One caveat, and we go over this in the video, these typically you're never going to be in overbought or oversold territory and then get the crossover immediately afterwards. You need to wait. Typically that takes some time. So this crossover, if we were in overbought territory, would still be valid even if we were overbought back here. A lot there. I think it's very easy, and it gets you in on some decent position trades. So in any case, back to the question, Dominic, what would I be doing? If your favorite pairs are the majors, this is probably where I would start. 4-hour chart. No real question about it for me. And we just sort of picked the yen out of a hat. We did a swing trading clinic the other day, and we talked about it. This could be a potential swing trading type of an approach. 9 crosses under the 20. There's your crossover. And what makes this beautiful with the RSI that I just showed you, look where you were. Overbought territory. There's your crossover. So your entry is going to be probably right here? Somewhere in here. And you absolutely crushed that trend. You got short from north of 152, and now you're down to 149. That's beautiful stuff. That is a textbook swing trade. You can use a 4-hour chart for your swing trading, especially in Forex pairs. So if you're going to trade Forex 24 hours a day, around the clock, or hold for multiple sessions, I recommend the 4-hour chart. I mean, that can get you where you want to go pretty fast. Now, if we're going to scalp, and we're going to do that in here in a second, we're going to be looking at much shorter time frames. So there's a little bit of leeway there. It just depends on your goals. Excuse me, my throat is dry. Still battling a little bit of a cold. So I'll be looking at dollar yen. So right now, do we have any trades? Okay, we just looked at the 30-minute, what's going on there. Right here, if I'm looking at a 4-hour chart for the dollar yen, what do you got? You're in oversold territory. You're looking to buy this thing. When this 9 crosses back over the 20, you're buying. That simple. It's that simple. So right there, you're looking to catch maybe a little bit of an intermediate term swing low. This one would definitely be on my radar for the rest of the week. Dollar yen, 4-hour chart. We're looking for that 9 to cross the 20. When it does, we're sending them long. Okay. I do want to show you that same strategy, and I want to show you on gold because it's very important. Now, a lot of people say, Shane, okay, if you're going to trade the Forex majors using a 4-hour time frame, what are you going to trade gold on? You got to watch what I say here, because gold is a true 24-hour commodity. No question about it. Most of the gold is traded all around the world, all the way from China to London to New York City. The big thing that we're thinking is so much gold is cleared through London. That London session, that UK session is huge for gold. But in the Asia-Pacific region, tremendous amount of gold's being traded as well because of the Australian output, number one. Also, a lot of the Asian countries love to stockpile gold. They use gold. Every government does. Every institution looks to gold. I view it as a complete 24-hour market. Now, from a broader perspective, what can we really say about scalping gold? For me, I scalp gold futures during the U.S. session. I begin during that London-U.S. overlap at about 8 a.m. Eastern, and I run that all the way through about 2 o'clock Eastern at the latest. Now, given that time, we can go down to a 30-minute chart, 5-minute chart. We can do that. It just depends on what we want to get accomplished. This 4-hour chart is fascinating because we were talking a lot about hey, maybe we need to get this 4 hour. Remember the sell? We were talking about a sell the other day. I was waiting for that crossover right there, just the 9 to cross over the 20, under the 20. Go back and take a look at Monday's session. We pretty much called this. Now, this right here is a great move. But if I was using RSI to confirm the move, it wasn't there. We weren't in overbought territory ever. Our RSI reading did not get high enough. Therefore, I could not make the trade. And just to sort of see if we can, it wasn't high enough. The RSI right there was only, right around 62. It's got to be above 70. We got to be above that threshold there. So what happens? We rally, got to swing high. And even though we crossed over and came down to the low, we didn't have the parameters to make that trade. Now, if in fact we weren't filtering it, game on. There's your sell. So if you were trading gold like for the last, I don't know, even if you started this today or if you started on Monday's open, okay, right here's Friday's close. There's Monday or Sunday's open. So right there, you're looking for a crossover. There would have been your crossover. So that would have been your first buy. You could have got out right there. You could have had a fixed risk versus reward. This sell right here would have got you to the short side. So if you're just playing crossovers, you're short right now. But once you add this in there, and I recommend maybe adding this in there, especially on the shorter time frames we're going to look at, then you'll have an opportunity to get in on trades that have a little bit more confidence in them. And we're going to go through some of those right now. Dominic, what's in the cup? I got some coffee in there. I got a little bit of my blackout coffee. Yeah, it's pretty good. I ran out of cream today, though. I usually have half and half in there, so I'm using a creamer, and it's not as good as it usually is, but it's pretty good. Let's see, Brian Barbie. Good to see you, Brian. Okay, I got a question. Right here. JC, hey, Shane. I always tried to trade it when the RSI was in the oversold or overbought position. Your explanation of any time after the RSI high or low will give me a lot more opportunities to trade. Yeah, absolutely, JC. If you're waiting for this to be perfectly overbought, and then you're waiting for a crossover to be perfect, you're never going to get a trade. So right here, you'd say, okay, Shane, well, what would I be looking to do? I'd say, well, you're above 70, so you're going to want to sell on the crossover. So right there, probably could have sold. Look where your entry would have been, though. There was your cross. It would have been a bullish candle. You'd have sold right there. It wouldn't have been any good. Wouldn't have worked. Of course, would you have done that? It's a strange chart pattern. You wouldn't have done that because that's right on Sunday's open. Wait, give these things a little bit of, I should probably make a video just on Sunday's open, trading Sundays and Mondays. That right there is one of the reasons why I don't do Mondays. Sorry. Irish coffee. No, Dominic, there's no Baileys in there and there's no Jameson in there. Can that be used on crypto? Absolutely, Norman. We're going to look at all this stuff. All right. So right there would be gold. So let's say we want to scalp gold right now, and it's not the best time for it, but let's take this down to a 30-minute chart, U.S. session. And this is why I really recommend right here working on that overlap, because you can see the market is really dried up. And typically in gold, you see that this time of day. So what do you got? You got a nice crossover there. Do you want to go long right now? Intraday? Nope. Why? You didn't get quite beneath your RSI. So your low right there is going to be 30.77. We need it under 30, and that'll give us our clean cut buy signal. We didn't get that. You got a crossover. If you want to send them long, you can send them long. For me, I wouldn't do it. I don't know what's going on here. I wouldn't do it. It's dead. I would wait. Wait for that RSI. If you're going to go real short time frames, wait for the RSI. All right, let's get in here and see if we can do a little bit of work. Let's go with E-mini Nasdaq. I know that's always a dandy. People love that. Let's go right down to a 1-minute chart and see what's happening here. Now, you can get away with a 1-minute chart on a 920 trading NQ futures, and the reason why is it's just an absolute obscene amount of volatility in this contract. I've traded it. It's one of those that you probably want to be relatively careful with. Let's go ahead and bring up the trading dome. Let's see, what do we got here? And these are all demo dollars. We got some realized, some still running from previous sessions, but this right here would be a 1-minute trade. Now, you say, okay, Shane, what am I waiting for? Relatively straightforward, guys. You're in oversold territory down here. You've rallied up. Right here, we're waiting to get this crossover. This might actually be a great observation or an opportunity for us to take a trade. So you've got a 1-minute chart right here. You're waiting for that 9 to cross over the 20, and that's going to be your long. So right here, we're sort of sitting on a long. Now, we're not going to want to limit order this. It's going to be a market order. It's going to be, we're looking at a buy. I'm going to go ahead just with a buy order, and that's pretty much going to be the name of the game. Now, as far as a take profit and a stop loss, this is going to be tough. It's going to be tough because a lot of traders are going to want to put static stop losses on. A lot of you love market structure and want to do that. There is no right answer. But what I would say is be sure that you're smart about where you put your stop loss. This right here, pretty darn good stop loss. 1 minute chart, you've got a little bit of a double bottom there. Now you're starting to get this crossover formation. We were in oversold territory. You say, Shane, yeah, but we're right around 50 right now. And I'd say, I really don't care. I mean, my point is this. This down here tells me that my stop loss, that's all I'm looking for is my stop loss relevant? They'd say, well, yeah, we were in oversold territory there. Now the market's bouncing back. I'm looking for that crossover, that 9 to cross over the 20 and sort of be, the catalyst to get us into the market and see the broader trend. So I'm looking to catch a bottom here. Think about what we're looking to do here. This is a NQ 1 minute chart. I'm looking to perfectly time maybe the bottom of this market. Now you can see right now the price action's vicious. It's moving against us, We're not in yet. And the reason why we're not in yet is because we haven't crossed over. So right here is what we're waiting for. So I hope that answers your question from a little bit earlier, JC, because I understand what you're saying. The idea of trading a momentum oscillator would be, okay, when the market it's oversold right now, I want to buy, or when it's overbought right now, I want to sell. And I'd say I can't really argue with that, and I won't argue with it. I mean, if that's one way to look at it. The way that I look at it is I'd say, okay, down in here, the market was severely oversold. I know I've got an out. Clearly, momentum's changed. I'm looking to ride this thing up into here. I want to watch this market go into overbought territory, and that's probably where we'll look to get out, somewhere in there. But right here, you see, okay, we've got something really good, and this is why we would use a 920 with confirmation. If you're just trading RSI and you're trying to buy into this stuff, you're getting killed. We don't want to get killed. We want the market to go down, exhaust itself, all right? But we're not ready just to take the trade on faith just in case it's a strong trend. We want to be able to get in when we got some confidence that, hey, the tides turn. Things are shifting. So that's what I would use the RSI for. For me, personally, 1 minute chart NASDAQ, it doesn't get any riskier than this, baby. It doesn't. I mean, when you're trading, I've traded it. I traded it not too long ago. But this volatility, if we were going to trade 4 lots on this, we'd be looking at about $25 a tick. And I will tell you for a fact, you better be right, because it's tough to ride out those moves in the E-mini NASDAQ if you're wrong. We're going to watch that for just another second here. Let me see. Ask Furhan. Yeah, good to see you. Ask. Welcome. What do you think about using the MACD crossover with the EMA 920? I get that question a lot. There's nothing wrong with it. There's absolutely nothing wrong with it. Nothing. I think that if you're a MACD expert, go for it. I've made videos on MACD. I've had a lot of arguments with other traders about MACD. It doesn't matter what I think about the MACD. What matters is if you're comfortable with it and if you're fluent in reading the MACD. That's what I would say. So if you're comfortable with it and you really like that as an indicator and you can tell when a market is becoming exhausted, remember, they're all momentum oscillators. I don't care if you've got RSI down there or you've got stochastics or if you've got MACD. They're all momentum oscillators. That means that you're waiting for the market to get tired and then you're taking a position against the market. I mean, that's the way that most people trade it. Some folks try to trade breakouts and they'll buy actually when we're in overbought territory. Nothing wrong with that. If it makes money, there's nothing wrong with that. But you can see right here how fast this thing moves. I mean, that's craziness. So we're still waiting for our crossover. We're not going to get it. All right, let's move on. Let's see what else we've got cooking. But yeah, you can absolutely use a MACD, 100%. We had a question about crypto. Right now, Bitcoin's fallen out of bed since we've been here. I'm still not too overly concerned about it, but I don't like it. So let's go here. Let's see if we can get a Bitcoin trade going. What's the 920 doing on Bitcoin? All right, we've already got that position still open. It was looking a lot better yesterday, wasn't it? If we're on the 1 minute, what do you have? Okay, right here, this would have been a good example. 1 minute chart, and I don't recommend doing this on a 1 minute chart, but right there, there would have been your low. Okay, there would have been your buy, so you'd have bought right there, and then you'd have got stopped out on that crossover. You could have done that. Okay, now what are you looking to do? Market's almost in oversold territory. You're going to want to look to probably bid this thing if, in fact, it comes back. Now, if you were going to trade Bitcoin, once again, I don't mind a 4-hour chart. I really don't. The real question is how are you going to approach it? If you're just going conventional, Right up there is your crossover. So you could have potentially got this back on Friday. You could have got this short in. That's great. How about right now? Oversold territory. We're waiting for a crossover. And honestly, I think that that's probably a pretty good trade. This is where our trade stands from yesterday. We're down about 3,900 or 4,000. Remember, those are demo dollars. We were up about the same yesterday afternoon. So I'm just watching this closely. This should be interesting with Bitcoin. But you can 100% use this on crypto. Let's go to Dogecoin. Here's another good one. Not anything done on Dogecoin. 4-hour chart, you can see it's really the same as Bitcoin. What do we have maybe on a 5-minute chart right now for Doge? See these bars? You don't want any part of this. Why? There's not enough volume. It doesn't flow. Let's go to maybe a 30-minute chart. Okay, this is doable. So what do you have on a Doge 30-minute chart? Nothing yet. We're not in oversold territory, but we'd be looking to buy this market if we go just a little bit lower. So there'd be something there. All right, let's take a look at a big mover and a shaker today. Natural gas. What do you got for natural gas? 30-minute chart, oversold territory right there. So we'd be looking to buy this on a 30. Let's take this down to a 5 and see if we can actually get a trade. Okay, that would have been our trade. Right there, oversold territory. So we're hoping that area right there would maybe just maybe be our bottom. It wasn't. That right there is a great example of why if you buy just when the market's oversold, you're liable to get crushed. You can see the leg down. You don't want to be a part of that. So what are we waiting for? We're waiting for the market to turn. So the market finally does turn. Right there would have been your crossover entry. Right there, that would have been your entry right on the bar close. That's an easy way to do it. We can do it. We can have entries. We can wait for pullbacks as well. We made a video about that, 9 EMA and Fibonacci. Go ahead and check our channel out, and I show you how to do that with the 9 EMA. But this right here, where would our stop loss be? Right there. Where would our entry be? Right here. Where would our profit target be? Could either be 1 to 1, 1 to 2, 1 to 3. A lot of traders they absolutely love market structure. They'd say, okay, we're going to go ahead and run at today's highs from here. Nothing wrong with that. Just remember, if you try to do this, it means you're trying to pick a bottom. That can be extremely difficult, but doable. As long as you stay within the framework of your strategy and you keep your risk reasonable. Shane, what's a reasonable risk? When I first started doing these live streams a while back, it was 1 to 3%. I'm a big believer in the 1 to 3% rule. I know a lot of you don't have much money. I mean, I don't have enough money to go in there and just be super risky. Or actually, I don't have enough money just to sit here on 1% and trade it and make a living. So I've sort of extended my views to 5 to 7%, maximum of 7%. And just remember, if you catch 2 or 3 losers in a row trading 7%, you're in big trouble. Your account just took a 20-something% hit. You're probably not coming back from that anytime soon. So I recommend really starting small. If you're just getting into the market and learning, I had a guy ask me not too long ago, said, Shane, I have $100. What's my best position size? And I'd say $100 is great. It's great to learn with. Use the micro lots. Work a 5% rule, maximum of $5 on a trade, because at least that way you're going to get 20 unique trades in, something like that. And remember, when you're learning this game, what you need to do is you need to be in the market. You need to trade to learn how to trade. You need to trade to learn how to trade. So do the legwork first. Watch the videos. Do the reading. Do the research. Get a demo account. Do all those things. Get into as many free contests as you can. And then when you can scratch together $100, $200, put it in an account and start trading it small. Get used to trading. Understand that to learn to trade, you have to trade. Personally, I've made thousands and thousands of trades in my life. I have a pretty good idea how to place the trades, and I know what to expect once I'm in. If you're trading a strategy like this, it's one thing to do the back testing. And I'll be honest with you, this is easy to back test. I mean, you could historically back test this. This is a piece of cake. You can do it visually. That's not hard. Go back 90 days. Use a 5-minute chart. Go back 90 days. Pick your favorite market. Refine it during the London-New York overlap, especially on a Forex pair. That's all you have to do. All right, Dominic, good to see you. Because some trouble, Shane. You have a fantastic day. Absolutely will do. You have a good one. Jack Warren, hey, Shane, do you prefer entering on a pattern or bar by bar? Good question, Jack. I have a lot of folks that are pattern aficionados. I got a gentleman that sent me almost a perfect head and shoulders pattern the other day that I didn't see. So great work. If I was interested in entering the market and I was using the 920, I think you're referring to the 920 Jack. If you're going to do this, the bar, the easiest way I can say to enter is just to go ahead and go like on a bar close right after your crossover. So if you're trading WTI crude, right there was your crossover. You could have got away with it. You'll notice WTI on a 5-minute chart hasn't been outside of anything today during the U.S. session, so it's been a real flat session. So you can enter right there on the bar close, and that way the trade's easy. You just go right above that swing high with your stop loss. You dial in your profit target somewhere down here. I recommend at least a 1-to-1. At least a 1-to-1. You could do something like that. As far as how do I enter the market, I look at key levels, key numbers for me are big. So, if I was looking at maybe this Nvidia monthly that we were looking at earlier today, and let's say I drew my Fibonacci sequence like this, I would have been looking to bid, right from the level, not the level itself, but probably right in front of it. That's called a shade. And in that way, I can try to be predictive and proactive with my entry as opposed to reactive, which a lot of these things do. A lot of these strategies are all pretty much reactive, which is okay. There's nothing wrong with that. That's for sure. All right, Mobile, have a good one. All right, guys, I'm going to go ahead and sign off here. A couple of things that are going on right now. Actually, I wanted to talk a little bit about this, and then we'll go ahead and let's see. Right there. Well, my stream deck went down. In any case, we actually coded this strategy, and it was one of those things that we did this to get a few of you guys interested in the 920 and make it just a little bit easier to see visually. And that's sort of what we had here. So you can see this is our end product of all of our coding efforts, and that was a nice shade, a nice trend indicator with the shade in between the bars, and then also the first bar after was a gold, and the first bar after a cross under was a purple. So if you wanted a real visual, user-friendly, easy way to be trading this 920, check out the coding video. It's like right here, 30-minute chart on the Euro USD. You can see it's really slow. Back off to a 4-hour, and what do you have? 4-hour gets you into a pretty darn good trade. There would have been your entry, bang, right there. Stop loss would have been beneath that swing low, and you're just sort of rocking and rolling there. And the shade, always remember the shade, the area between the 9 and the 20. The fatter it is or the wider it is, the more you're trending. That's for sure. All right, everybody, I'm going to go ahead and sign off here for a while. A lot going on in the markets. We didn't cover any breaking news or anything. There's just a lot going on. The big deal this week's going to be the U.S. signing a rare earth minerals deal with the Ukraine, and it looks like there's peace. There's going to be a Russia-Ukraine peace. There's also big news coming out of that region as well. Big election news, and I'm going to let it develop before I start talking about it because it could potentially be a huge energy market driver, but I wanted to let this settle, and we're going to talk about it tomorrow, trading a hot Thursday news cycle, and that's when I'll give you my market reads and everything. But right now, Bitcoin falling out of bed at 84.2, so we're definitely going for a ride off another 5%. This should be an interesting pullback. In my view, it could be relatively deep, but if we get an opportunity to back up the Brinks truck from about 75,000, boy, it's tough to pass on that kind of pullback. We knew a pullback was coming, guys. Markets don't move in straight lines, and right now Bitcoin's getting hit. So if you're long Bitcoin, I tend to agree with you. I think we see a 125 at some point this year, but right now the struggle is real. That's for sure. All right, everybody, have a fantastic trading day. I hope you got something out of this workshop. If you have any questions, cruise on by how to trade and send me a question. All right, till next time, trade the action well, and we'll talk soon. See ya.